Okay, so we're gonna go through the traditional pre-market watch list, which is we're gonna go through our scanner of stocks and look at setups that we're gonna be trading for today. We're gonna start with looking at the overall indices, Asia, Europe, and US. And there's some big movements happening pre-market already, especially in precious metals. Precious metals have been hot lately. We have a lot of exposure to gold and now silver and also metals as well. So we got a lot of trades moving on that. So we're going to go over that. And then we're going to go through potential day trade setups for today. And then we will go through, we'll just take open Q&A at that point. Good morning to you, Chi-Chan. So, all right, just a brief kind of recap of what's happening over in the markets. S&P's down a little bit right now. S&P futures are down a little bit, nothing crazy, 8 points. Europe's down decently though, but nothing heavy, so it's down across the board. Every single European index is down right now. But it's mild, 0.5%, 0.25%, 0.75%, 1%. So nothing crazy, nothing aggressive selling. It's certainly, it'll be interesting to see how US responds to this. If it just kind of starts a slow dip and then dip buyers come back in as they have been traditionally. So we've only had a few sessions of overnight losses that continued into overnight losses with the US. So that's kind of what's going on in markets right now. Let's start with the scanner and see what's going on here. So we got a few on the list, and then we'll go to Benzinga. Fran, whoa, Fran's going gangbusters. Okay, so what's up with Fran? You're up about 100%, which is good. And pre-market volume, 3.5 million. Okay, so what's average volume on Fran? Average volume on Fran is only 220K. So this is like 10, 15 times, of normal pre-market volume. So what is Fran all about? Apparel footwear. Let's see if we got a news catalyst on Fran. So you see some of that much kind of news. Okay, there we go. So where you see with that some of that kind of volume, there's something going on generally. France Reports has reopened 674 of 72 boutiques as of July 17th, repaid 2 million outstanding borrowings, total cash 12.1 million. Okay, so sees Q2 sales being 67.71 from loss from operations of 21 to 23 million. Q1 adjusted EPS 973 versus 264 in the same quarter. Interesting. Okay, so some decent news, some not so great news, but stock is up and volume is just surging on this one here. So let's start with the weekly. Actually, let's do the pre-market highs right now. Just like if there's a big spike, I usually like to just kind of mark the pre-market highs, and then I like to go to the weekly and kind of see where is it in perspective to the longer term time frame charts. So resistance pre-market highs is at 1019, and that's kind of okay. So there's a little bit of interesting resistance there. You got this base right here, you got this resistance right here. There is kind of a little pocket of consolidation resistance here at 1195, 1148-ish. But then past that, it's got a lot available for it. I don't know if this stock is going to be like it. I can't necessarily see this being some sort of gangbuster stock that just has a lot of fundamentals behind it, but I think it could be a quick day trade runner. So I think if it gets past 11, this resistance here, the pre-market highs, then you have 1124, and then it's got some scope to go to 15. So I think you should watch for a break of 1043 or a pullback to the VWAP, which is clocking in right around 82 and 9. If it does break this out, you'd want to see a breakout structure. Otherwise, watch for a pullback on this one. But volume has been pretty strong, and it's been consolidating the last few minutes after hitting some serious resistance. So it's kind of thinking about whether it wants to break through or not. So set an alert above 1053. I think this is one of those stocks that will probably lose a decent portion of its gains either by end of session or by sometime this week. So try and be quick on this one is what I'm thinking. So in my opinion, try and be quick on this one here and, take your profits and try and neutralize risk as much as possible, because I can't really see this being something that has some major fundamentals behind it that would go gangbusters. But for right now, it's a hot stock. So we're going to move this over to the list as a potential trade for the day. SPPI, pharmaceutical biotech, has just been hot Pharmacudo says brief results from cohort 3. So that was yesterday's news. Now it's positive top line results in HR2 exon 2 insertion mutation cohort 2. Okay. So I'm not sure if it's anything related to COVID or anything like that, to the virus or anything like that. So just kind of be mindful of that. But big spike after hours, and it's already fading a little bit. So this might be a fade play. This might be a fade play back down to here. So pre-market highs right on 591. Let's see how that is in the context of things. Actually, pre-market highs are right there. So yeah, it went to this resistance pre-market, and then it's since sold. There's been no additional follow-up buying. And unlike Fran, which had volume surging over the last few hours, this had initial volume basically on the end of market, and then the volume's kind of faded since then. So my suspicion on this one is probably more of a fade play. If you can, yeah, I'd be leaning more towards a fade play on this one. It would be great if it got back up towards 538 or 627. But there's a pretty good layer of resistance between 627 and kind of the base of this right here. So hello to you, Ramin. So yeah, that's kind of where I'm leaning towards this. I could easily see this fading a lot of these gains. And if it does, you know, you're talking to move back down to 380, 350. So leaning towards fade on this one here. I will push it over, but yeah, I'm leaning towards fade on this one here. So I'll set an alert for pullback to 536. All right. What else do we got on Premier Gap? Freya. And now it says insurance issuance of shares in respect of previously announced settlement claim. Okay, that was July 6th though. So APHA, anything crazy going on? Cantor Fitzgerald maintains overweight, raises price target to 11. That'd be way above. So what are you all about as a company? Gains in production side, medical cannabis. There we go. So, okay. So this is a cannabis play. And so if you want to make a play on this one here, I mean, the stock still is pretty inexpensive. Let's see what's happened here. So COVID, it dipped a little bit, but it's just been gaining since the March bounce. It's already recovered. It's already recovered the prior losses from that. There was on the weekly here, you can kind of see this base here and to reject off that and broke above that. So that might be an interesting support if you want to take a long-term play on a company like this. The field is kind of interesting right now. There's some really good opportunities and there's some skeptical ones, but I think a pullback to 469 somewhere right there might be a good value play. Pre-market highs is 609, so you're kind of at right there. If it gets past 635, then you get about $1 play to 736. So that could be an interesting play on this one here. I like the pullback on this one here, though. I like the pullback. Had a good run yesterday. Very good run. Yeah, very, very good run yesterday. Good buying in pre-market. What's the volume? Volume's nothing crazy. Pre-market volume is nothing crazy. So yeah, I wouldn't expect this to go gangbusters or anything. And typical volume is 7.4 million. So the big volume was yesterday. So there might be a second day play on this one here. But I'm not saying that from a volume perspective. So you probably want to see a big burst in volume or buyers come in. Otherwise, you can look for pullback to prior yesterday's highs, which is 583. But I think a bigger dip is more in order. 565. There's a really good base of resistance here on 528. So that might not be, this is this right here. And it just broke through it. So maybe a pullback to 528. If you can't get the pullback to 461, if it gets to here, show support, that might be an interesting play. So keep an eye on that one there. Okay, Sohu. What are you? Internet software. Seems like a Chinese company if I had to guess. Online media searching game service company charts online products PC. Beijing, China. Okay, so Chinese stock's pretty hot right now. There's pretty good breakout structure there, but there's some parabolic moves and some selling since then. So let's see where you are. Pre-market highs, 19. The volume isn't there. And I've noticed with a lot of these Chinese stocks, a lot of the movement is in the overnight session because that's when China is actively trading. And Chinese traders have been pretty aggressive trading Chinese stocks. Okay, so I like this better. I like a pullback better to 15 because of the fact that, yeah, it's a good base of support here. Yeah, I like a pullback towards 15.63. You got a decent base of support here. Volume has been pretty strong in the weekly. It's been building as it's been rebounding. So all very strong on the volume side. But I like a pullback to here before considering a long on this one here. Average volume on this one here is normally 1 million, and yesterday's volume was 6 million. So you might see some profit taking. Yeah, that was just ahead of 20. So you might see some profit taking. I'd watch for pullback on this one. I think pullbacks are probably a better play on this one here. Okay, hello to you, Stefano. All good if you're late. Okay, so pre-market setup. So we went over Fran, we went over SCPPI, VXRT, good biotech stock. What's going on? Float, 48 million. And nothing crazy on, nothing crazy. What's going on with volume right now? Oh, volume sub. It's sub 600K. So not a whole lot of volume leaders right now. 200K, 300K, 400K. Those are not crazy volumes. Usually you want to see 600,000 million shares traded pre-market. And then obviously it needs to be, you have to consider in relationship to overall volume, average volume. Like if you have 1 million shares pre-market volume, but the average shares traded on a day is like 30 million, that's not a whole lot. It's 3%. But if you have 1 million shares traded volume and the average is 1 million, 2 million, 5 million or something like that, that's good because you got anywhere from 100 to 20% to 100% of your average daily volume already in pre-market. That means the stock's in play. So not much else going on with that. So VXRT really doesn't fit the volume price. So really just SPPI and Fran. Okay, so let's take a look at a couple plays that I'm in right now. So I sold a bull or a bear call spread on the NASDAQ, but I did it through the QQQ, which is the ETF for the NASDAQ. And so I announced this in my members area yesterday. Basically, I feel like the NASDAQ has been leading. So if we zoom out just for a second here, let me minimize that. So NASDAQ has been leading the indices. S&P hasn't made it back to its all-time high. NASDAQ blew through it. This is prior all-time highs, and it's just diced right through it. We haven't had 2 weeks of bearish closes since this, bottom. There's been no 2 weeks of bearish closes. We've had a few sprinklings here and there, but the NASDAQ has just been a one-way train. Anytime you've had some sort of bearish pressure or a thin candle, the next week was just bought heavily. Then we've had 2 weeks of selling, and interweek it tried to get to the prior highs and it sold off. So that suggests to me that there is some potential weakening in the QQQ or NASDAQ, and that, at a decent scenario, we're moving into a corrective structure, and I could show you that better on the 4-hour chart. And so if we're moving in a corrective structure at the top of a very, very large move and all-time highs, it helps to examine the size of that corrective structure. If it's a small corrective structure at the top of a trend, then that's usually indicative of high bullish momentum. So there's, because it's a small structure, there's very little profit taking. There's very little presence of the counter trend players in there. And so usually that means strong continuation move is very likely. But when you have these very wide corrective structures, that not only indicates that there's a greater presence of counter trend players, but that there is a change in momentum. There's a change in the order flow. It's not like high momentum with little profit taking. It's high momentum and then a fair amount of profit taking to the point, and a fair amount of counter trend players coming in. And so, when I play out the scenarios in my mind, there are 3 scenarios that I see. There is the kind of corrective structure plays itself out for a little bit. And if it does, then it should stay inside here. And so that gives me an opportunity to sell a bear call spread, which is an option strategy. It's a vertical spread above this. So the high was 269. So I sold the 270 and bought the 275 above the corrective structure. So that's scenario one. Scenario two is that this corrective structure is a sign of distribution. So the smart players have made a lot of profit on this, and they are now selling to some of the weaker players, the quote unquote dumb money who thinks that the trend may continue. And so they're trying to offload a lot of these trades and profits to players who think they're going to keep going. And once they start to exit their positions and hand it over to weaker players, then it could start to weaken. So in that scenario, it will put pressure on the downside, maybe even break to the downside. In that scenario, my bear call spread profits as well. The one scenario that I don't profit from is that the market closes above 270. It has to actually go a little bit past that for me to hit break even. But it would have to close above the all-time highs. And we've had some pretty strong selling. We got to here just to 270, just shy of that, and bam, you're talking some really aggressive selling and then some dumping. Dip buyers came in. They were able to, kind of hold the line for a little bit. There was a good base of support around 256. They launched higher for a really aggressive move. And then you saw some pretty strong selling, corrective structure, really strong selling. And then dip buyers came back in again. And so this time, though, it hasn't quite as aggressively gone back up to the top. Like this only needed 4 4-hour candles to get back to the top. And this one's had a lot more time. So it tells me that it's not as strong as it was before, which means slightly more bearish pressure. So that could either lend itself to scenario number one, corrective structure is going to play itself out, in which case my bear call spread profits, or scenario two, that there's going to be a weakening and we start to see new structural lows made. So to bolster that case, I'd like to see it get below the weekly VWAP in this case. And I'd like to see it retest these lows and then have, an ideally a weaker bounce, because then that would just signal more and more changing in the hands turning over. So a bear call spread. Hello, Nair. Nice to have you here. And Nair de Pedro, good to have you here. So a bear call spread is you're selling a call above current price and you're buying a further out of the money call. And so it's a credit spread, which means that by selling the option, I get the premium right off the bat. I get a credit for that. And so what I want is for the market to close. It's an August 21 expiry, which is monthly expiration. So it's a monthly contract, not a weekly option contract. And what I want is the market to close below 270 by August 21st. So I have about 22, 23 days to go on this right here. And, there's weekends in that. So really about 18 to 20 trading days on that. And so if the S&P or if the NASDAQ does not break above this and never gets above this here, then I collect the full profit from that trade. I do have a max risk on this. Call spreads, any sort of credit spread has a max risk on it. So I do have a max risk on that. And if it starts to, if the structure starts to change and it starts to really put pressure on this and build up higher and higher and lower highs or higher lows and continues to build up, then I could get long the QQQ to offset some of that. Or I could roll it further out if I want to neutralize the risk, but I don't really want to do any rolling or adjusting or anything like that. If I really do feel like the QQQ and the NASDAQ is going to bust out, then I might get long it. That will neutralize some of the risk for me. So the main part of my risk is the call that I sold at 270. So I sold that. So I don't want the market to get above that. As soon as it starts getting above that, whoever I wrote that option contract to, they are going to, have the potential to exercise that contract and potential for profit. So if I don't have 100 shares of the QQQ at that time per contract, that option contract that I sold, well, then I have to actually take a position on QQQ. But if I already have the shares, then it will cover that call. So I could buy any point before 270. And then if the market does close above 270, then I would have enough shares to cover that call. So that's how that basically works on this one here. Okay, so we got some questions coming in. Wallball, hello to you. Okay, Ramin Nasiri says, between NQ, DJ, SP, and SP, DJ is the weakest and NQ is the strongest. Isn't it better to consider to sell DJ and buy an NQ? I mean, in line with correct PA. So in some sense, yes, that would be a good play. NQ has been the strongest, but if you also notice that whatever is the strongest is also going to be one of the first indexes or whatever that they're going to be taking profit from. So you have to think about it like that. Also, if you look at it structurally, so here's DJ on the weekly. And so DJ hasn't gotten there yet, but the overall structure, there's no wide corrective structure. Let me go to weekly on this. So DJ didn't have 2 weeks of selling, which is a disruption of the overall trend and price action that has happened. ES hasn't either. So, you know, look at ES, there's been no 2 weeks of back-to-back selling. ES is just continuing to build. And that's the market open. So DJ is just a little bit behind, you know, corrective structure started to break out. DJ is inside the corrective structure. So I could take a play on DJ if I wanted to. And since I have a clear corrective structure on it, then I would have a clear way of playing the bear call spread. But the overall price action hasn't been disrupted, whereas QQQ has been disrupted. You know, the overall pattern has been disrupted. We haven't had 2 weeks of selling since this bounce. So tech feels a little bit overheated in my opinion. DJ doesn't, even though it's structurally weaker, it doesn't feel overheated. S&P doesn't feel the same kind of overheated, and there hasn't been a disruption in the S&P structure. So that's why I took the QQQ play, because I feel like I'm trying to get ahead on something that I think is turning. And so when I look at it, what's happening with QQQ? Yeah, so it's down right now. Indices are all down, which is actually good for my play, and VIX is up a little bit. It'd be nice if we can get some good acceleration on this. I'd like to see this break below the weekly VWAP, and that would help my position. But hopefully that answers your question there. I mean, it's a good question. Oh, and make sure you hit if you're enjoying this, make sure you hit the like button there. Really appreciate it. Helps us out with the YouTube algorithm. Gives us the love back. Tells YouTube, hey, we really appreciate these live videos, and they in turn reward us. So we appreciate that. Okay, so a couple more questions, and then we're going to wrap it up because the market's opening here. Just real quick, I want to check on. So Fran's already broken below VWAP, so you have to now watch for a bigger dip. As I suspected, you know, Fran really wasn't. I don't suspect that Fran's just going to be something that's going to be like a multi-week runner. I think maybe it has gains for today, but then after that, I think Fran is kind of in trouble. I just noticed the video. The webcam quality is interesting. I wonder if I got the streaming quality changed. I'll have to check that next time. Okay. Yanni's saying, can you please explain dip buyers? Dip buyers are just people who believe that the trend is going to continue. They're looking for dips to key technical levels or key value levels that they want to get long. So anytime there's some sort of dip, they feel like, hey, trend's not changed yet. I haven't seen anything change in the trend. I want to continue to have exposure or add exposure to this trend. And so I'm going to buy in a dip. Okay, so Wallball says drop a like. Thank you. I appreciate it, Wallball. Okay, so Ramin says good points. Thank you. Really appreciate these when I can catch them. Cool. We'll be doing them every Tuesday, Wallball. And so, you know, who knows? I won't be here this Friday. I'll be on vacation starting this afternoon. But then after that, following Friday, you know, I'm trying to squeeze some in on Fridays, some extra sessions on Fridays when I can. If I get here early enough, I'll continue to squeeze some of those in. But yeah, we'll try and get towards 2 a week. So Arvin DeLune, hey Chris, new to your course, welcome. Welcome to the Second Skies community, or the Sky Community. So let's see here. Why again do you use the 20 MA, not the 10, not the 15, or the 50? So for me, the 20 EMA, when I'm trading stocks, I use VWAP. VWAP is my dynamic support and resistance. But when I'm trading anything outside of a stock that will have a VWAP indicator for that. So if I'm trading FX, or if I'm trading certain commodities or something like that, like gold, I like the 20 EMA because it has a balance between being sensitive to shorter term price action and medium term swings in the market. So it's an exponential moving average, which means it's going to weight its sensitivity towards the more recent price action. And so I like that because the 20 EMA is not too far out like a 50 or 100, which is kind of a slow moving EMA. And I think also once you're past, the 20 EMA, like once you start getting like 50, 100 or something like that, there's no point in having an EMA. You might as well go to a simple moving average because it's so many periods at that point that being sensitive to the last few candles over 50 really doesn't make much of a difference. Being sensitive to the last 3, 4, 5 candles over the last 20, that makes a difference. So if something changes very abruptly, the 20 EMA is going to have enough sensitivity to start turning well before a 50 will. The 50 will is just kind of more like a medium long-term type EMA. And so it's not as sensitive to recent adjustments. And so I like that 20 EMA because it's a nice balance between short-term and, medium-term price action. So hopefully answers your question. Wallball says, good for you. Well-deserved vacation. Thank you. Yes, I definitely deserve it. If you can see the dark circles, I didn't get much sleep the last few days. So, yeah. I definitely need some good R&R. Wallball says, I'm curious. I have the APA course. I've been thinking like in a stock course. Been trained stocks for 3.5 years with the APA format. Is the stock course much different? Yes. We're teaching you skills in the stock trading course that you don't get exposed to in the APA course. So yes, it's totally different. Also, the stock trading course right now is the only course that has me sharing my live trades, or at least stock trades, stock and option trades. Any sort of trades I'm taking stocks and options or indices, that's the only course where I'm sharing that live in the Discord channel. Like, hey, I'm taking such and such position. Here's the time horizon. Here's my entry, stop loss, take profit kind of thing. If I'm doing a day trade, if I'm doing a swing trade, if I want to add exposure to something, or if I'm reducing exposure, that it has that as well. So yeah, it's a different focus because the course is entirely focused upon stocks, and there's certain skills that are unique to stocks that are not even remotely covered in the price action course. So yeah, it's definitely a different course, and it will feel like it too. Not only that, even though the APA is a larger course by volume because it's been around for years, and it's like our most attended course because price action is a core skill across all markets. The stock trading course is way more active. We have way more traders. It's less traders, but because a lot of them are day trading and posting several trades a day, it's just more active on a day trading type basis, particularly centered around the US session. So yes, very, very different course. Hopefully I answered your question. Okay. So we are now a few minutes into the market open. Let's just kind of recap. Fran is fading. So now, yeah, if it loses 757, then I think it's headed to, mid fives. So it could be a potential fade on this one here. It's already lost a fair amount of the pre-market gains, kind of as I suspected. So, if it does bounce a little bit, I may consider a sell with tight stop above, but I'm looking for a fade play on this one here. What else did we had cover? SPPI also fading as we suspected. So I think now your probably best entry point, in my opinion, is probably around 475 if you can get it. Sohu is building. Okay, that's good. So this is something that's maintaining strength. You got a base of lows around 17. So consider that. Otherwise, 1578. QQQ is fading, which is very nice for my position. That's very, very good. This is what I want to see. I want to see QQQ fade. I want to see it get back to these lows here, because if it does that, then that's a further disruption in the structure, because last time it got this low, it re-challenged the highs. If it gets here, bounces, and then comes back and retests the lows, that would suggest more weakness. So this is working out very well for my bear call spread on this one here. Let's see what's going on with just gold real quick. And then gold's fading. Gold got to about just within inches of 2K last night. And then profit taking, which is what I told my members on Friday. I said, I think gold's going to get to all-time highs or 2K. And then you're going to see profit taking. It's a huge round number. It's all-time highs. It's such a natural way to take profit. If you've been long for a while, you're going to want to take some profit. Either a lot of them are taking all their position, or they're reducing exposure which naturally puts pressure on gold. GDX is a gold miners index. So there was a good base of 43.39. It broke through that pre-market, came right back to it. You can see that very, very nicely. I'm still long GDX 38 or 39 or something like that. We took a breakout on, when was that? We took a breakout right around here. 38.60, I think, was our last position. So we're still long from that. I think there's a pretty good base around 42. So I may look to add some exposure there. And then after that, I probably wouldn't add some exposure until 40.5, which is this resistance here, support, or I might just wait back till mid 39s. But I definitely want to add more exposure to GDX if I could. SLV, we've added some exposure to that. And so where would I want to add? SLV is obviously being affected by gold. So probably there's this really good structure right here. So I think that might be a decent area to potentially add some exposure mid 21. And then below that, I would like to potentially add, where was the big breakout? It was like 19. Yeah, so we go back to here. Actually, let's go 4 hour. Yeah, so there's a big breakout right here. So I think then if it, besides this region right here, I think I'd wait to add exposure then to mid 18s. But I definitely want to maintain exposure to silver over the coming months. So I'm happy to buy at several points down the way. Even if it keeps going down, I'm happy to keep buying because I believe medium term and long term, there's more upside on silver. I think there's profit taking happening right now, well-earned profit taking. But I think then I think you're going to see more gains in silver. While saying, me and my buddy were thinking of making the switch to stock horse since there has been ample volatility. Yeah. It's just, there's great volatility in stocks. The stock market's hot right now. It's super hot. It's as hot as the FX market was like late February and early March when euro was going gangbusters and all the currencies, like a lot of the EM currencies were making all-time highs. Like that's what the stock market's been, but it's been like that since February. Like February, March, April, May, June, July, all been hot months. And I don't see that ending anytime soon. So whether it's continuing the uptrend or whether it's continuing, if it starts a big sell-off or another sell-off, I think the stock markets are going to stay hot for a while. So wherever volatility is, that's where I want to trade the most. And there's just so many opportunities in stocks right now. Like I have more opportunities than I can trade on a single day. There's that many trades. I don't have to go find trades. Maybe once in a great while, I'm like, not really seeing a whole lot, but like there was one day in June like that, I think, or maybe one day mid-July. But other than that, there's just so many opportunities right now. Like I can't even keep up. So it's just super hot right now. Yogendra, good to see you. Hey, Chris, hope you had a nice vacation. Yeah, I had a short vacation before, and now I'm taking a little bit longer one. So this afternoon we're taking off, and we'll be back on Saturday night. So yeah, looking forward to it. Okay, very good session, everyone. Thank you for participating. Make sure to give this a like if you haven't already. We appreciate it. It helps us out with the YouTube algorithm. And so we really appreciate that. If you'd like to see more sessions like this, let us know in the comments below and subscribe to our channel if you haven't. Also leave your comments on what you learned from this. And other than that, good luck trading. Stock Trading Course members, I will see you in the live trading room very shortly. Other than that, have a good trading session today. Really good opportunities out there. So be smart, be positive, be aggressive. And I will see you guys next Tuesday will be the next time I'm back for a webinar. So good luck trading, and I'll see you then. Take care, everyone.